Hello everyone, welcome to the ichimokujcharts.com daily analysis for the Aussie dollar US dollar FX for Wednesday, May the 30th, 2012. Well, a change of trend today, and we have a very large black body candle that's made a lower high and a lower low. The candle that we're analysing is the second last candle here. That final candle on the chart is currently developing and still has some time to go before trading has finished. So we're looking at this very large black body candle. So a change of trend. Yesterday we highlighted the rally in this market based on these indecisive candles, and the previous day was a doji type candle, much indecision in the market. The market tested above the 98.59 level twice and was strongly rejected, and this market was strongly set up for this change of trend that occurred today. So some sore stops placed below that low would have been very good trades in this market. The market has closed a long way below the previous close, telling us that the sellers are very keen. The market's basically open towards the high and closed down towards the low, so the strongest type of candle that we can have. The sellers have made substantial net bearish progress. They've closed with very strong control of the market. They've shown strong commitment to taking this market lower, and they've been in control of this market for the entire day, so a very, very bearish candle. There is potential for some support down around this level. We can see here previously the shadows on the bottom of these three candles where we saw buying coming in, and a previous support level at 96.62. And the market at the moment, with the way the candle is developing, the current candle is interacting with that level, and we've seen price rejection from there already. So moving forward, that will be a crucial area to this market. If we trade below 96.62, we could very quickly end up trading down to 95.36, so an important level for tomorrow's trading. Now, yesterday we looked at the Fibonacci extension, and we're in an uptrend. This candle, the large black body candle, hadn't completed trading. It had developed quite quickly, however, and what we looked at was the extent of this uptrend that the market was in relation to the previous uptrend. It was only a minor uptrend, but we saw the market interacting with the 161.8% level for the 2 days prior to today, and was strongly rejected from that area. So this once again highlights how important the Fibonacci ratios can be, and we've had confirmation of that change of trend today. In terms of the current Fibonacci extension, and what we're looking at here is the relationship of the new downtrend that the market's in compared to the previous downtrend. And the market has traded through the important 38.2% level in a bearish way today, and we're seeing this candle develop, this current candle, and find support at the 50% level. Coincides with that important level of support. 96.70 is the level here, and we're seeing rejection from there. So there is a possibility that the market will rally from this area based on that 50% level. In terms of the retracement of the previous downswing, remember yesterday the market was trending up, and that retracement terminated around the 38.2% level and the 50% level. We had the market interacting with both. The market failed to close above the 38.2% level, tested close to the 50% level on this indecisive doji type candle, and we've had confirmation of that change of trend today. So once again, these Fibonacci levels have been very, very important to this market. But looking at the current Fibonacci retracement of this previous upswing, now that we're trending down, and we've seen the market find support at the 100% level. Today the market traded all the way through the 38.2, 50 and 61.8% levels, and closed above the 100% level. At the moment we're seeing rejection from there. This level coincides with that important level based on the peaks and troughs and the Fibonacci extension. So there is a strong possibility that we could see the market rally from here, or perhaps even change trend, although the market will need to take out the previous high. Considering that we've taken out the low of the current candle, the suggestion of a change of trend is not valid now, because we would have potentially, if we took out the high, a candle with a lower high but a higher a lower low but a higher high, which will be an outside day and technically doesn't change the trend. So at the moment we are seeing buying coming in, and we could see some sort of a rally to the upside with the potentially with the sellers losing some commitment. Having said that, however, there isn't any sign based on the short-term dynamics of this large black body candle that will happen. All we're doing is looking at these Fibonacci ratios and looking at some possible areas where the market will find support. Now, in terms of Ichimoku, the market is bearish in the long-term time frame by trading below the cloud, bearish in the medium-term time frame by trading below the Kijun-sen, and bearish in the short-term time frame by trading below the Tenkan-sen, the green line here. The market was technically just bullish for the previous day's trading by trading above the Tenkan-sen, but we did have the market trading on an indecisive spinning top type candle. We also have the Chica span below the corresponding price action, confirming all of this bearishness that we're seeing in the market. So considering all of these indicators are indicating bearish activity, then the trades, especially the one yesterday based on the confluence of the Fibonacci ratios, the spinning top candle would have been to the downside. But now at the moment, even though we have the sellers keen in control, this is an extreme type day. The size of this black body is substantially larger than we've seen in this very near past, and it does look like an extreme day, and there's a very strong possibility that we will see some buying coming in and the sellers take a rest. Very often markets don't continue down and we don't get the follow through after these extreme days, and we're starting to see that at the moment where the market is interacting with this 96.62 level. So moving forward, this area around 96.62 is crucial. If we do see a bearish close and we see that change of sentiment over the next 24 hours or so, then we could see the market trading down to 95.36.